Welcome, everybody. Thank you very much for joining us tonight. Tonight, we're going to give you guys a demonstration of Dynamic Edge, one of the many trading strategies that the Academy offers, that we offer here at IM Mastery Academy. I'm going to show you a couple pretty cool things as well. A little something on Bitcoin. You'll notice I have the BTC USD pair up here. We're looking at it on the weekly. Those of you guys who know the strategy probably know exactly why I'm showing this, because there's a little something on this chart here that looks pretty cool. So those of you guys who know, drop it in the chat right now. Oh, EU just dropped. Okay, thank you, Chris. Okay, let's go have a look. There it is. There it is. Looks like it has come right down to just about exactly where we expected. Let's see how much more we can get out of it here. We've got a nice bearish hammer candle here, this big wick. So we might actually be able to take this all the way to the purple. I'm going to take some profits out right now. There we go. How much did we get out of that trade? Let's measure this one here and let's see what we got. I got a late entry. I entered somewhere down here. I did it on my demo. So about 3 pips.
Could go down a little further, Steve.
I think
go down to that first Camarilla there.
Yeah, I think it will actually. I don't have my Camarillas on my chart right now. So maybe we'll look at that a little later. But you know what I'll do? I'm just going to add them right now. So you guys get to see how the sausage is made, right?
The secret sauce.
Yeah, man. Let's show off all the secrets here. Okay, there we are. I'm just going to set this to the proper. Change it to Camarilla. I'll change that. And we're just going to go to 1 so we don't clutter up our chart when we're scrolling back. Something didn't go right there. There we go. All right. Yeah, you're right. I think that's quite possible, Chris. So now we have some lines here, guys. These lines are on the chart here are little destination points, kind of where we expect the market to go to. And it's really important when you're trading to actually have those destination points. I mean, you don't get in your car and go somewhere. I mean, maybe some people do, but not too often. I can't remember the last time I actually got in my truck and just started up and drove, not really knowing where I was going. So it's the same thing with trading. You got to plan what you're going to do. And so these little lines really help. And then the algorithm actually in the pivot scanner actually gives you a target and an invalidation level, where if the market goes against you, that's your stop loss. You exit. So anyway, guys, we're going to let this trade roll. Those of you guys who are not in the trade, you're late, so do not enter. The entry was back here at the arrow. But I'm going to give you guys, especially those of you who are new on the call, I want to give you guys a little bit of a really quick overview of really what it is that we do here. So enter IM Mastery Academy. You know, to learn to trade, I didn't know this when I started the Academy, but I found out later that the going rate to learn to trade is around 10,000 US dollars for a trading course. Brutal. The Academy is very different, both in terms of price and also in terms of the quality of education and really what you get. You get community education, you get AI tools, one of them we were just looking at a moment ago. So it really is a full recipe to get you over the line as a successful trader, which honestly, with some of the trading courses I've seen for sale, okay. So some of the trading courses I've seen out there for sale, this is far superior. So I'm going to run through this really quickly, guys. This is the one thing I really want everyone on the call to get. Look at these statistics. 95% of the population, that's you and me, the majority of the inhabitants of this planet only control 5% of the money that is traded, or of the money that is held on this globe. So we have only access to 5% of the world's wealth. And then there's a 5% minority, and they have 95% of the wealth. And that's kind of like 95 squirrels fighting over 5 nuts here. and then 5 squirrels, and they have 95 nuts, and nobody's fighting. So what the Academy is about showing us how to cross over this line and join the 5%. So now at the Academy, there's a number of opportunities. We believe in multiple streams of income here, because if you were to ask any wealthy person, they'll tell you, ask them actually how many streams of income they have. It would be more than one. Most people, it's around 12. At least, if they're really, really wealthy. So what we offer here at the Academy, we do have an opportunity for you guys to get into this 4%, but we're not going to talk about that tonight. I'm going to jump back here. Chris is helping me here. Let's just Yellow Brick Road. Yeah. Okay. Yellow Brick Road exit right there. Yeah. Okay.
So a little while back, but
yeah, that was our exit. So
it's hard to get timing right on here.
Yeah, exactly. So this was our destination. We hit the purple, and that's where you'd be taking your profits right there. I should have actually given people the price number, because I put that into their brokers as a take profit point. So anyway, it's demo, so it's all good, right? So I'm going to quickly jump back into this. This is not going to take long. Excuse me, guys. I'm just getting over a cold. So, but what we're going to talk about tonight is how to get you into the 1%. And that's the investors where money works for you. So introducing the world's largest financial market. So what we just traded in on demo is actually the world's largest financial market. It's a market that has roughly around $8 trillion US traded in it every 24 hours. By contrast, the stock market sees somewhere in the billions. I don't remember what the number is. I think it's 50 billion or maybe 100 billion, which sounds like a lot, but it's nothing compared to the currency market. So the Forex currency market is the globe's largest market. And it's interesting to me how that most retail investors, that's regular people like you and me, don't know how to trade in it. Like, why would you not? It's way bigger. And it's actually where your money goes if you were to go and put it into a savings account in the bank. And they'd give you like maybe 0.25% per year. Meanwhile, the traders, the professional traders that are actually trading that money in the real market, have a requirement to make a minimum of 3% gain per day for the bank. That's what your money does. Your money makes 3% minimum per day in the financial market, in the world's largest financial market, and you don't get any of it when you put it into the bank. So what we're about here is showing you guys how to do that. So enter the Academy. This on this little screen here. You're actually seeing a little snapshot of what it looks like inside the Academy. It's a screen that's very familiar to me. I was in there multiple times today. And it's kind of like the lobby to the Academy. It's where you access your education, your educators, your mentorship, your strategies. It's just so well done. Now, this here is the 100 series. Guys, we can start you off at the point where it's literally baby steps. That's where I started. 2 years ago, I didn't know anything about trading, really nothing about finance at all. In fact, if anyone ever came to me and wanted to talk about money or trading, I would try to exit the conversation as quickly as I could, because it was a pain point for me. I felt like it was out of control of that area of my life. And then along came my friend Dan, and Dan introduced me to the Academy. And now, guys, I sit here now gainfully unemployed, or should I say gainfully unemployable. And it's all because of this. So I'm really grateful. Really, it's because of God. I have to give the glory to God. The Academy is a tool that he brought along, but all glory to God really on this one, because it was after I had prayed out a desperate prayer that he connected me with this. So I'm really grateful for that. Now, I got to talk about digital currency. Digital currency is probably it really is something that everybody should know about, because it is the future of our financial system. So we have a whole section of our Academy that is devoted to digital currency. And we have some of the world's best educators and best minds in the digital currency space on staff teaching, and they are just absolutely amazing. Crypto Picasso, he is probably been in the digital currency space as an educator, probably one of the longest running educators. I'm not talking about just inside the Academy. I'm talking about globally. He understands what he does very well, and he teaches it really well. So Since we are here to trade, though, I am going to keep this as short as I can. We have e-commerce as well, all about creating an e-store. And, that's what the whole world's gone to, shopping online. So again, we're about creating multiple streams of income. So there's a lot of opportunity here in this house, so to speak. And here's Go Live. This is where you get your live mentorship from your educators. Absolutely. It's unparalleled, guys. It really is amazing. And then mindset. Mindset's probably one of the biggest aspects. I didn't know this when I started, but now I would say that the trading is really, for me at least, 20% technical and 80% mindset, because people get fearful about their money. And that's one of the things. So the makers of the Academy, they know that. And so they've brought some of the world's best mindset coaches in house to teach us and to make sure we're not falling off the wagon and losing faith in the opportunity and ultimately in ourselves and in God. So now, of course, we have tools, and one of those is what we're going to show you tonight. You've already seen it, those of you guys who were on the call earlier. It's the Pivot Scanner, and the Dynamic Edge strategy is built on the Pivot Scanner. We have apps, and here's what it costs. At the moment, it's on sale. So your first month's $234 normally. I just enrolled someone today. $185 is what he paid. So I thought that sale was over, but apparently it's not. So I don't actually know when it ends. Maybe it's the end of the month here. So that's your that's your first month, excuse me. And every month thereafter is $175. Again, I have to remind you, the going rate for a properly done trading course is minimum $10,000 US. So this product here, this education product that the Academy offers, is extremely disruptive to the education space, because what it does is it lowers the bar for entry. So normal people like you and me can come in and learn and succeed. So this is Swipecoin. We don't have time to talk about it. There's so much, guys. There's so much I would love to show you, but we just don't have time. So what we're going to do is get back to the charts here, though. And this is something I want everybody to listen up here. This is really cool. So before I hand it over to my friend Chris Leyland, I really want to show you guys something cool. All right. Okay. So if you look at these little arrows on the chart here, we're looking right now at the NAS. So if you look at these little, you notice every single really good move, notice how there was an arrow right before it, right? And then you'll notice these little arrows that don't do anything. We have criteria that filters those out, okay? And one of the criteria is these bands are squashed flat, so they're really tight. And so you can expect, that's called consolidation. So you know the market's not going to go anywhere. When the bands open up, we know that's the time of opportunity. So if you notice, though, every single one of these big moves that has happened has been forecasted by an arrow. Now, one of the things that happens with an arrow is something we call a hopper. A hopper is where this little blue line crosses up through this zero level. Right? I've just marked it up with a line. You can maybe hardly see it, but this zero level is where, for example, red will flip over to green. So we call that a PSAR, not a PSAR, I'm sorry. We call it a MACD flip. This indicator down here is called a MACD. Very, very powerful indicator. And it can predict market moves with tremendous accuracy. You just have to know how to read it. And the way James Leone teaches it, it's really easy. So one of the things we see here is this hopper where this blue line crosses up above the zero level. It also, and what you're going to see is that when that happens, it generates an arrow on the chart above, right? And look at this arrow, pips, right here. Consolidation, it's real tight, right? So we stay out of that because we know we obey the rules, right? I want to show you guys something really cool. Okay. I'm going to go over to the Bitcoin and USD, Bitcoin versus USD pair, and we're looking on the weekly. So each candle here is 1 week of time. Look what's about to happen. See this blue line? It's getting close to the zero level. Now, let's look at what happened last time we had a green arrow on the BTC USD chart on the weekly. Right here, August 16th, 2021. Let's look at what happened to Bitcoin after we had this arrow, even if you were a week late, right? Let's measure from here. See what happened to Bitcoin. Bitcoin went up 48% to $65,000 last time we had a green arrow. So that's kind of exciting, isn't it? Let's look at what happened last time we had a red arrow. Okay. So I'm going to measure right here. This is one of our dynamic edge we're taught to do. This black line here is kind of like your, this really is your stop loss in a sense, because if it crosses up above the black line, you exit your trade with a very small loss. So we're going to start from here. We're going to take this little retest. See how you get the red arrow? You get a red candle and a green candle after retesting this level. This is normal. This is what's supposed to happen. And when you wait for that retest, you get a really good entry. So we're going to actually go right from the retest. We're going to measure all the way down. Bitcoin tanked 30% in 3 weeks. Last time we had a red arrow. It went from a price level of roughly about $50,000 all the way down to $35,000. You know, even if you don't want to scalp with us, guys, which is the trading method we use, where we're in and out of our trades in minutes, this tool is extremely powerful for swing trading cryptos. If you're stacking a crypto portfolio, this is incredible. When you see that arrow, you know it's time to go ahead and unload your bucket, because you're going to see a little bit. You're going to, go ahead and flip it into USD. And again, by the way, guys, nothing we say on this call is financial advice. What you do with your own money is your responsibility. But I just wanted to show you guys what happens here. It's amazing. So this is just an example of how this works. These little arrows carry a lot of authority. We have other criteria that we mix in to allow us to be able to determine if a given arrow, we can actually judge the signal strength when we see this arrow. So I want to show you one other thing, crypto, that I'm really interested in. We're going to go find a weekly chart for it. Look how close XRP is to a hopper. So this hopper here, excuse me, is a point of decision. So if you keep an eye on this over the next week or two, remember, this is a weekly candle. So it takes a whole week to make a new candle. I'd say if everything goes like it has in the past with these arrows, we're likely to see XRP take off in the next couple of weeks due to what we're seeing here, because we're getting really close to a hopper. The blue line is pointing up at a good clock angle. So a little exciting for me because I hold a lot of XRP, but I digress. So with that, I'm going to pass it over to my good friend, Christopher Leyland. Chris is the deep, booming, authoritative voice that leads our team call every weekday morning at 6 a.m. Pacific. He comes on there. One night we were up till midnight the night before, visiting and just hanging out. And sure enough, he was on. I slept in till 7, but nope, he was on at 6, probably even before. So he's kind of the, I don't know if you guys have ever played tug of war when you're a kid, but you know how you put the really, really strong kid right on the back because he's the anchor? Well, Chris is kind of the anchor. And we're really grateful for him. So good to have you with us, my friend.
Thanks, brother. Thanks. My pleasure. My pleasure. So, so Steve wanted me to just kind of go through Dynamic Edge, see if we could find you guys some trades. I've been watching Euro USD here for the last 15 minutes or so. 20 minutes. And things are just, it's starting to go nowhere. Absolutely nowhere. And I'll share with you exactly why it's going absolutely nowhere. And it is because our bands, can you see my screen? You should be able to see it.
Good.
Yeah, you're good. Okay. So our Bollinger Bands here are very contracted. They're very close together. They're not expanding. And our middle Bollinger Band here, this black line, is now between pink and purple. So all that means is that price is just going to go up and down in between this pink and purple and kind of in between the Bollinger Bands until something happens. So this is where we just kind of always are watching and looking and always checking. We'll always be checking ABC, and we're looking for divergence because in these consolidation, we can see levels of consolidation and divergence. So, right now, we're looking for divergence from peak to peak. You can see that I drew some up a little bit earlier when we were on, and I believe it was right here. This was when Steve kind of called this one out. You got the arrow, you got the hopper. PSARs were outside. It actually broke through one of these Camarilla levels here, one of these lines. If you don't know what that means, that's okay. You don't have to. It's just a line. Just remember that it's just a line. We had this big round number. This was something else that was really interesting too, was that where we had divergence, we had rejection of a line. This is one of the steps in the process that James has taught us with Dynamic Edge, that we have divergence. We're looking for a divergence where there's a discrepancy between the histogram down here and the actual price action up top. But look at this. We have our divergence, but look at this one candle wicked up right to a big round number. We call that a BRN, and it's always a very strong point of interest to traders and to financial institutions. And I don't know if it's psychological or what it is. We don't know. All we know is that big round numbers usually have some type of rejection around them. They have some type of movement around them. So when we say rejection of a line in our steps of the process, that's one of them. Big round number. It doesn't have to necessarily be a line like this, a Camarilla line or a pink line or a purple line or one of these dotted lines. It can be a big round number, right? Or it can be a point of resistance before. But it was right at that divergence, and that's really cool. I like to see that, where we have divergence and we have rejection of a line right away. You can see that we had divergence a little bit before that and a little bit before it here and a little bit right there, but mostly started here. So we would have seen it would be like, oh, divergent. Okay, yeah, it's still divergent, and boom, hit a big round number and rejected. And so Steve had a good call there. But what we're looking for is divergence again. Right? We're looking just this here. This already played out, right? We saw the bearish divergence and we saw the rejection of a line, big round number. And then we saw the signal. What's our strength of that signal? Oh, PSAR's outside. Bands were expanding a little bit at that point. We were in sell mode. We had a pink above purple. So it was counter trend. So it was really only a 3 to a 4 point trade, right? A little bit higher risk, which is fine. But we know that when it crosses down below purple, like pink would have been our target, purple would have been our target after that. So you could have gone in for a couple of pips, right? You could have got 5-10 pips, right? So right now, there is no divergence. I don't see any as at now. So that's another term that we use. It's as at now. So that's right now, like right now in the market. But if we look back, I'm sure that we can find some. We found some here. Even this peak here. One of the things that we do like to do is go to a higher time frame, right? And we can kind of look back. I'm just going to make this a little bit bigger so that you guys can see it. And so this is an hourly chart. So I want to see divergence as at now. I'm going to be looking for as at now. And you can see we have divergence as at now, because this is lower than here, but it does not reflect in the histogram. So we're expecting that price is going to start to go down, right? I have a little boy that's trying to get my attention. he wants to play Minecraft, but that's not going to happen right now because you're going to have to be patient and wait. Okay. So yep.
Fun.
Oh yeah, I don't mind working around the kids. It's fun. So on the divergence, so we can see that there's divergence in the 1 hour chart. We can see that there's we've had this swing up.
Hey, Chris.
Yeah.
I'm sorry.
No.
UJ
UJ
is just crossing the mid Bollinger Band right now.
Okay,
it's an interesting one to look at. It might be heading for a buy hopper, which would be counter trend.
Oh, why am I missing it? There it is. 1 minute UJ. Oh, yep. Yeah. Well, we could. Oh, yeah. That counter trend. It's counter trend, but we have been uptrending for a little while here. Actually, and it's tested some of these lower levels, some of these higher level EMAs. Yeah, no, that looks good. I like that counter trend. Yep. So that would be your pigeon right there.
Yep.
So I'm not saying that we would be taking this, but I am saying that we might be taking it, but I'm not. You can interpret that however you like it.
Yep. None of this is financial advice.
None of this is financial advice. You should always be on your demo. Always.
Absolutely. Yeah, actually, seriously, I wouldn't. Right now, I don't think I would touch this with my live account. This would be a demo for me. There's our arrow.
There's your arrow. There's your hopper. You got PSARs very nicely outside.
Yep.
Right. And really, if it breaks above pink and purple, this thing could start to really start to climb.
Yeah.
But that's what I'd be looking for. Also, I'd be waiting for these bands to start expanding too. Not waiting. Sorry, I shouldn't say that. That's just another added confirmation that things are going to start moving in that direction. But what is the biggest thing that people find in trading that's really hard is, where do I get in? Where do I get out? Right? So we just crossed over that middle Bollinger Band. That's where you would get in, right? This is where we're looking for things to move, to start going the other direction. The fact that that middle Bollinger Band is pointing down, it's like, it's still counter trend, right? Pink is below purple. It's counter trend, but there is still the possibility to catch pips there, right? You've got the signal, you got the hopper, you got the PSARs are outside. Why not? Okay, so you're crossing that middle Bollinger Band. You've got these other things that are saying, yes, take the trade. You take the trade. So where do you get out, right? What if it starts to go the wrong way? Because it's counter trend, because you don't have as many points in the process, what is your exit, right?
So we're at a point here. This is our FOB point. Sorry to interrupt you.
No, that's okay.
But if it starts to reject this pink, take your money. Take your money and run.
Yep. So FOB is a term we use that's called finger on button. So when we're trading, when we say finger on button, we take a counter trend. We've got our finger ready on the button so that we can get out of the trade. So in this instant where we've entered the trade just above that middle Bollinger Band, that black line, and it gets to pink because pink is our first target on counter trend trades, we would be closing the trade out. Or we would be holding. There's some other things that we can show you. If things go a little bit further here, we can show you how to utilize being able to catch more pips. But what if it started to come back the other way once you came up above the middle BB and you entered the trade for a buy and it started coming back down. Where do you get out? How do you get out? Right? As soon as it closes crosses down below that middle Bollinger Band, you would close the trade out. That's another reason why we have FOB, finger on button, because it can come back so quickly that we're ready. We're ready for that.
My stop is at break even right now.
Nice. So Steve's in a risk-free trade, completely risk-free. Like, that's amazing. Now, as price goes up in the direction that we're wanting, Steve can slowly increase his stop loss above his break-even point where he got in, so that he can secure a little bit of money every single time when it starts to go up. So you can see, pardon me, that price is kind of rejected off of middle BB. Sorry, not middle BB, the purple. It's rejected off of purple. So here's, you could have just closed the trade out at that point. I probably would have just taken it. I would have taken the money. TTFM, take the freaking money.
I just took it.
Nice. Amazing. So another way that you can take profits or know when to get out to take profits is what we call the yellow brick road. And this yellow line, right, that you see in the chart, as soon as price comes and closes below that line and the next candle forms and drops below the body of that previous candle, you would close. In this instant, like this example, say we got in right here, right? That's 63 points. No, it's not. 6.3. 6.3 pips.
Yeah.
Right? So, we would be, we'd want to see, some bigger moves, 10 or 20 or, somewhere around there. But 6 is okay. 6 is fine. I totally forgot where I was going with this.
Can I interrupt?
Yep.
So one of the things with MetaTrader leverage trading that everybody needs to understand is that we actually don't care how many pips it goes, as long as the number of pips that it goes is at least double what it would have gone against us. So it's something we call risk to reward. So with this trade, I would have tolerated maybe about 2 pips of loss for a 6 pip positive. So that's called a 1 to 3 risk to reward. So meaning that I'm risking 2 pips to make 6 pips. So what that allows you to do is you just simply increase your leverage to the level where a 6 pip move can make you, I'm obviously we can't talk dollar figures here because we're not allowed, but a 6 pip move can make you a lot of money, like a lot.
Sure can.
To the point where you get maybe 2 of those trades a day and you're good. So it doesn't matter how many pips it moves. You just increase your leverage to the level where your risk is something acceptable. So if you're willing to risk 2 pips, set your leverage properly so that that's a dollar value that that's within proper risk management. So I want everybody who's new on the call to understand that this 6 pip move is very small, but it doesn't need to be any bigger than that.
That's right. See, this is a great example here of following the yellow brick road. Remember I said that this candle would have to close below the yellow, and it never did. It closed just above it, and look what happened. Right? If it closes below it, and this candle pops down below the body of this previous candle, we would have closed it out. But look at where we're going now. It's great. Let's go.
Oh, man, I should have stayed in it.
Love it.
In fact, what I normally would have done on this one, I was playing a smaller, I was using a smaller lot size. What I normally would have done is actually taken partial profits at the top there and left part of my position still in.
Mm-hmm. Yep.
but I didn't do that on the demo account.
So here's our thing where we're always checking. So from here, yeah, well, it's going to be from that point to here. We have bearish divergence.
Oh, we do. So we may have a
Okay.
sell opportunity coming up soon here, which actually I like better, to be honest with you.
Yeah, I do too. I do too. Just with the way that things have been moving here,
Hmm.
um, it has rejected these lower levels. So I'm not surprised to see it starting to come back up. It may not, when we see divergence, doesn't mean that it's going to come down right away,
Yes.
right? It just doesn't mean that, right?
Yeah.
Even here, like look at this. We are even divergent from here to here. I don't know if
We
you can.
are.
I don't know if you can see that or not. Let me just make it bigger. Right, so you're divergent from there to there. Right, but a bit of a discrepancy here. But doesn't mean that it's going to happen just yet. This could very easily turn into convergence, right? And until that happens, I won't explain it until it actually happens, because it can be a little bit confusing when you're looking for divergence and convergence, right? This is just a skill that you got to learn, if it's just like driving a car, right? Just like driving a car. But
Divergence is, sorry, go ahead.
no, fine, go.
Divergence
Sure.
is really exciting because it's actually one of the very, very few things you can do on your chart that actually gives you a leading indication of what's about to come.
Mm-hmm.
It doesn't tell you exactly when it's going to come, but it does tell you that at some point we have a high likelihood of a rejection and a move down. And there's very, very few things. If you learn more about indicators and so on, and those of you who are on the call who've been around the trading space for a while, you know that typically what happens is most indicators on your chart will they won't tell you anything when a move is just starting. They'll alert you about a quarter away through the move. And as long as the market's moving well, most traders are willing to sacrifice 25% of the profit they could have had just to wait for all the indicators to line up. But divergence is a very, very powerful thing. And I think that's part of why Dynamic Edge works so well, is because James teaches it in a beautifully simple way. And speaking of simplicity, for those of you guys who are new on this call, you're looking at Chris's screen and maybe my screen earlier. Some of you might have had the reaction that I had 2 years ago when I first saw a financial chart. It was utter bewilderment. And I thought to myself, I could never do this. Well, here I sit. Both Chris and I are kind of ADHD people. I was diagnosed with it as a kid. I think he was too. And I used to repair appliances for an income. He used to drive a truck, and here we are now pulling money out of the markets every day, because this skill has been brought to the point where we can do it. So it's pretty exciting. Thanks for the space there. I'll pass it back to you, Chris. Thanks for the interruption.
No problem, no problem. There was a question in the chat. Rob was asking about how to take partials how to take profit in a partial. So it's really simple. You just go to your close screen. Depends on whether you're trading on your phone or a PC. But when you go to the close screen, you just simply reduce your lot size. Reduce the lot size from where you had it originally, and close the trade. So if you were at a point 3.0, you would close 1.50 of it, and you would still have 1.50 left in the market on a trade, and then you could close that one out later. Yeah, just let me know if that helps.
So I can show him. I can actually show him live. So I actually went ahead and got in this cell on my on my demo. So I can show him how to do that right now if you'd like me to share my screen here.
Yep. I stopped sharing.
Okay. Okay, so this is the closed screen for my MetaTrader 5. And here I've got a volume of 1 standard, 1.0 in, and I can hit this close button here and it'll close my entire position. Or I can take it and change it to a 0.50. Whoops. 0.50. That's half of my position, and hit close. So now I only have 0.50 left in the market because I've closed 0.50 of a 1.0. So that's called taking partial profits. I hope that makes sense. And I'll pass it back to you, Chris.
Cool. Thanks, Steve. That's awesome. It's I love these tools to be able to share this information with people. I'm such a very visual learner, so it's great having these tools to be able to show people and teach people. It's pretty cool. It's really really cool. So yeah, it looks like we had a bit of a rejection there. Off of this move down. Whoops. Here, we kind of had a big move down. It's kind of testing structure here too. Like, look at this big drop that it had. Big drop, tested this level, came back up. Big drop, tested this level down here, came back up. Kept coming down. Kept testing these levels up here. You'd probably be surprised when you look at this level here and you look back in the charts, like, oh, look, there, price was there once before.
There's our pigeon on UJ for the sell.
Yay. Nice. Yes, you should get a PSAR, or should go outside. Yeah, you could enter just on the PSAR. Oh, it's not quite inside, but I would go for it. Yep. Absolutely. So that rejection, I've drawn up a Fibonacci on this bigger move from top to bottom, and this kind of is a bit of a something you can learn too on how to use Fibonacci numbers. You can really get into the rabbit hole on Fibonacci, and it'll absolutely blow your mind because it is incredible when it comes to learning how to trade in these different markets. And I'll show you a couple of different examples, but this was good because the 382, you could see from this move, this is where we measured from here to here. Here, I'll measure it for you again, just so you can see it. So this was our high point here, from high to low. We're just going to drag it across all the way through so that we can see. And you can see from our low, price came up and tested this 382 level. You can, I'm zooming in on this so that you can see test. Like, it's right there. It's plain as day. And did I not say that we had bearish divergence? Bearish divergence. And there's a rejection of a line, right? So, and we are pretty close to big round number being $1.22, right? Is it $1.22? USDJPY, yeah. 122 yen for $1, right? So, right, there's the signal. Signal came a little bit late, but that's okay.
That's okay because we enter our pigeon candle is the candle that crosses the black line.
That's right. Right there from that one. And look at even the dynamic edge puts out a target for you too. And that lines up nicely where with structure used to be previously. But it's got a little bit of work to do, Steve. You can see it's got this EMA, this dotted line. This is extra EMA that I've added in there. They're based on Fibonacci numbers.
Yep. It's sitting on that EMA right now. It's trying to work its way through it.
Yeah, so these are just points of resistance. Funny enough, like these numbers, right? Like that's a 377. It's a Fibonacci number. Like everything revolves around the fib. Like it is absolutely incredible. So we've broken through that one. That's good. It's trying, and it's really, really trying. But look at the bands though. Bands are expanding, or not expanding, they're contracting.
Yeah.
Right?
Yeah.
So we gotta really watch for that. But this could go, it could come down, and this band would expand. It would start to flare out.
Yeah.
Right? So it's being held up a little bit there.
So when you see that contraction, if you're nervous and you're in profit, you can take your profits there. That's the beauty of this strategy.
Mm-hmm.
Is it's a strategy where most people are used to swing trading where you've got to hold a trade for days sometimes, hoping and praying that it reaches the target and doesn't hit your stop loss. What we do here, guys, we take little nibbles. Our educator James, he uses the term a bite of the apple. He's like, yeah, I just take a little bite of the apple here and a bite of the apple there and a bite of the apple there, and hey, I've got enough to pay my bills and then some.
Yeah. So we've got bullish divergence. I know it goes back and forth all the time.
Oh yeah, we do. Probably good time to TTFM, hey?
Yeah, you could take that profit. You could take that profit for sure, 100%. Because it's just faffing around right here. It's just faffing around. That's one of our educators' favorite things to say. It's just faffing around, right?
He's Irish.
So, yeah, from Liverpool. But yeah, you can see here these, when I don't draw this line out here, let me just remove that line. Well, you can see on my crosshair, you can see how when I line it up, they're equal, but up here they're not equal. So we call this equal distant. So it's divergent, and you're going to hear like that it's hidden divergence, that it's this kind of divergence. We don't give it labels. We don't care. It doesn't matter. Don't confuse yourself or boggle your brain with a whole bunch of useless information. If it's divergence, it's divergence. It doesn't matter, right? So we can see that. And then this is a really good example here of divergence that can turn into convergence. So it's where it's close enough that if price does come down below this level, it's going to it's going to line up, right? This side of the histogram here is going to be lower than here, and price here is going to be lower than over here, right? Eventually. And that would be convergent. And that tells us that price is just going to continue in that direction, right? But we don't know that for sure just yet. It's just faffing around right there. That's all it's doing. Okay? So you look at the Bollinger Bands. Bollinger Bands are really flat. It's not doing anything.
Yeah.
Right? But we can see that there is bullish divergence. So we would be expecting, we're sitting and waiting, right? We're looking at this blue line going, oh, look, hey, Steve, look, it's curling up. It's curling up. Oh, look at price is starting to move up. Okay, so we've had divergence. Where's our rejection? Okay, well, there's a bit of flapping around over here, right? Where price kind of got stuck. And it's kind of done the same thing here. And we're also really close to big round number, right? And like really close. Like actual true big round number is right here. Right there.
Yep.
22,000 or 122, right? And then so we see these things and we're like, okay, there's our divergence. Here's our rejection of a line. You can see it was flapping around here and flapping around there. And it's come up above this EMA. Okay, what are we waiting for now? Right? It's like, oh, look, it's coming up above that middle Bollinger Band. Here's our pigeon that we would call it. See, it's not quite there yet. It's not quite there yet. Let's just zoom this in.
Yep. Look at the rejection.
Look at that. Look at. So we're like hands off. We're like, okay, we just have to be patient and wait. But we see the divergence. We see the rejection of a line. Okay, what's our next step? We're looking for a cross up, right? Just remember, whenever this red line, see this red line here? It turns green when it starts to go up. And this yellow line, when it crosses above this green, it gives you the green arrow. When it crosses, when it turns from green to red, and it crosses, the yellow crosses down below through the red, you get the red arrow. So it's the steps in the process, right? Divergence. We've seen rejection of a line. Okay, what are we waiting for next? We sit on our hands, and we wait. And we wait. We could go look at another pair. We could go look at Euro USD. What about GBP JPY?
Ooh, yeah, GJ.
That's okay. GJ seems to move quite a bit. It moves quite a lot. It's a little bit faster moving pair. Ooh, I like this a little better.
Oh yeah, those are just nice, lovely little waves. I mean, really, when you get the arrow, all you need is just one candle that agrees with the arrow to make money.
Yeah.
Doesn't mean the market has to go that way forever. That's the beauty of scalping.
Yeah.
It's a totally different way of trading. And it's actually, in my experience, my very real experience, it's a lot more profitable.
Oh yeah. Let's just draw a fib up. Let's see. Oh, look at that. It rejected that 382.
Funny how it does that. Over and over and over again.
I know, isn't that crazy?
Yeah.
But it doesn't mean that it's not done. It could come up and hit what we call the golden zone, which is the 50% 618 zone. So just for some of you that don't know a Fibonacci, when price comes up between these levels, you can see 50%. This is a 50% line. And the 618.618 zone. If price were to come into here, we see it reject, and we'd seen divergence, we'd be like, okay, we can get in. That's just another confirmation. We would wait for, price to cross middle BB. But if it broke above that 618 line or that 786, it would invalidate the Fibonacci. And we would say, okay, that's not our trade. That's not our pips. It's great.
UJ just went. That's okay. Let's play with GJ for a while.
It just went. What?
Yeah.
Did it go down?
Up. Which is actually a good opportunity to sell it back down again. And it looks like it's going to reject the purple here.
Oh, UJ.
Yeah, UJ.
Oh, and this one was looking really good too. Oi.
We don't have divergence though. So we're getting a rejection of a line, but we don't have divergence.
On
UJ.
UJ. Okay.
Yeah.
Oh, yeah.
It's still tradable, but it's very rangy. It's guys, there are like right now, what you're seeing here from UJ is it's not the easiest pips to get, but we're getting them. I mean, I've taken positive pips out of both of those last two trades we did. Sorry to derail you, Chris. Maybe GJ has really got. I think GJ is actually moving a lot better. It's giving us much bigger moves. And when we say GJ, we're saying GBP. That's the Great Britain pound versus the Japanese yen.
Yeah, but UJ, bands are expanding there.
Oh, yeah.
Right? You got some band expansion. It is happening. You've had the hopper cross up. The only thing that's going against it is that it's the PSAR.
Yeah.
PSAR flip. And it's inside the Bollinger Bands. and this could be the top, right? That could be as far as it's going to go.
Yeah.
Based on the Fibonacci, that 382.
Mm-hmm.
I don't see it breaking that 382. If it does, that'd be really good.
Yeah,
We would be going up into that 50%.
for sure.
But we've got some, you know, support here. Like this like price reached this level before. We reached this price before. There's a reason why it didn't go beyond that,
Yeah.
right? And that's why price is there now, and it's going. It
Yeah.
ain't faffing around anymore.
No, it's going for it.
Yeah.
That's the beauty. How is those big moves like we're having right now? They almost always have a hopper, an arrow, a signal, and a hopper. Almost always right before the move. So you take those signals and you're gonna be in when the market takes off. So
Yeah, exactly. It's
we're
it's being at the right place at the right time,
yep.
right? And knowing when to get out. That's when to be in the right place at the right time.
Yeah. Oh, we should have gotten in that one. For those of you who are on the call here, you would have really enjoyed that. What are we now? 11 pips in profit. That's a very big trade actually for
For you, Jay.
yeah, for a scalping lot size.
Yeah.
That's that's bank.
Yeah, that's pretty good. So you can see it doesn't have to move very far.
No.
Doesn't have to go very far at all.
No. Yeah, and for those of you guys who traded HFX before, you take advantage of very small moves. This is not that different. The beauty of this is that you can exit the trade anytime you want. You're not stuck in a trade, which was an issue with HFX.
Can be much more profitable too.
Yes.
Your risk to reward ratio is far superior.
100%.
Yeah.
So GJ and UJ, what I would like to do before we get off this call, I know it's 8:00 Pacific right now. I would love to take a trade, take a sell on one of these if it'll give it to us. I mean, we don't just sell because we want to. We sell or, we trade if everything lines up. We obey the rules. That's how you trade. It's very, very rigid, which I need very much.
I would say do it on GJ.
GJ, yeah. Okay.
Yeah, GJ for sure. This one, yeah.
Well, it was convergent when it rejected, though. We don't have divergence with that rejection. Let's just see if we have divergence on UJ.
I'm on UJ right now. And
no, they're both convergent.
It's convergent, yeah.
Yeah, and that's okay.
That's okay. Yeah.
Okay. Well, get your brokers ready for GBP JPY. Again, demo only this evening, please.
I'm just checking to see if this one here could possibly have a continuation up. Yeah, it could. Yeah, it's not wanting to break this level here. It's not wanting to break that S1.
Okay, well, we'll see what it does.
That was a nice move, though.
Yeah,
but beautiful. We saw it coming, didn't we?
We did. Mm-hmm. We did.
Yeah. I just want to point out too, Steve, for everybody that's on the call, I want you to be aware of how much time we took to actually really look at the charts and do our analysis. Like, we had a good solid 20 minutes of analysis. Yeah, we took some trades in between. We kind of saw some things happen pretty quick. But we took our time. We did not just come in and say, "Oh, look, it looks like it's going up." Yeah. No. You really gotta do your homework. You really gotta do your due diligence. Protect your capital, your demo capital at all costs. It's very, very important. But take your time. Don't rush it. You rush it, you will lose your demo money.
Yes.
Yeah.
Nobody wants to lose demo money. That's actually how I treat my demo, guys. If you are demo trading, treat it like it's a live account, because it's that time you spend trading your demo is what's preparing you to trade your real live account. And you take it very seriously, because this skill has an unlimited earning capacity. It's infinitely scalable. There are not very many businesses in this world that have infinite scalability. Yeah, look at that. We had a rejection. Look at that. Came down just into that zone and then popped back up again.
Yeah, it had divergence here, bullish divergence.
Yeah,
You
yeah,
can see it drew it up here.
yeah.
So, and it has gone bearish divergent
Beautiful. So
right here.
much higher likelihood then of coming up and rejecting this purple line up above.
Yes. And there's a higher level EMA in the way.
Oh, yes, there is.
And um, let me just see here. Whoops. I don't want that. Remove. Yeah. Well, you can see that it tested it before, tested it again. Right? So,
Yep.
what are we going to wait for?
Rejection.
Rejection.
So again, we're not entering a trade yet. So if we're wrong about it rejecting this line, that's fine. That's fine. Because none of us have entered a trade yet. We wait for our other confirmations to line up.
I want to point something out too. Look at this. Coming up, drop.
Oh.
Coming up, drop. Coming up. Now hold on. Remember, take a visual picture of that. And let's just quickly go back to UJ.
So
Look
this
at
is
that.
yen. So this is the yen that's moving right now then.
Yeah. Yeah. It is.
Yeah.
So.
Which at this time of evening it makes a lot of sense.
Mm-hmm.
Because it's I think it's their day over there, isn't it?
Yeah. It's starting to be, yeah.
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 Very cool.
I'm thinking you might want to continue buying this.
Well, look
Yeah.
at those wicks on the bottom.
Yep. I would stay in a buy on that.
Yeah.
I would take that one from, we should have taken it from down here, but if you're still in it, you could easily take it back up to at least this line here, 122.3495. That'd be 17 pips. That'd be huge.
Beautiful.
Huge.
Good trade.
Yep.
Yeah, I love that.
Now, remember that it's not just going to, go like this. Right? It's not just going to go like that. There's going to be, a move like this. And then it'll go like this. And then it'll come back up like this. And then it'll probably come back down like this. And then it'll go back up. Right? Like, you got to remember that it's not as much as we would like it just to run up like that. It is going to have some of those pullbacks and some of those, what we would call waves. We see retracements. We call them Fibonacci retracements. When we draw those up, remove all drawings there.
So one of the major differences between what we do here, what our educator James Leone teaches us to do, and what most traders do is that most traders will try and swing trade that. They will hold a buy through drawdown and through, being 70 pips in profit and then having it come back to almost break even, sometimes going into a loss and then going back up again to 80 pips of profit and then falling back down again. That's what swing trading is like. And there's a lot of swing traders who are multimillionaires, but it's hard. It's hard because it's very psychologically difficult to watch all of your profits go away and then hope they come back. Now, what we do here and what James teaches us to do is every time it gets to the top of one of those little areas and it starts to pull back, you get out. And then you wait for that little pullback to happen and you get back in again. So it's kind of like double dipping. It's like taking multiple bites of the apple. It's kind of like cheating, and it's amazing. So, and it's called scalping. It's amazing. So people who are really good at scalping, um, really end up doing a lot better, in my humble opinion. Breaks down below red. Yep, totally. Well, we are now after 8 o'clock. This has been a lot of fun, guys. Going forward, we are going to work a lot harder. Those of you who've been on our evening call before, you probably are noticing this is a little different than what we've done in the past. In the past, we sometimes, rarely, but sometimes got you guys into a trade. What we're going to be doing, excuse me, going forward, is we're going to be spending a little more time trading, demo trading, and talking the strategy through as we trade. And Chris is really good at that. So really excited to have you guys with us, and I'm really excited for all of us together as we do this. We have a thriving community now here with Dynamic Edge. Our chat is just constantly going off, and it's been so cool. I just saw someone the other day in the chat, a new trader who was struggling with something, and they jumped in and asked a question, as they should, in the chat. And then one of the other traders, who's maybe a couple weeks in, had just learned that same lesson that they were asking about, and she jumped in and shared in the chat exactly what she learned and helped out the new student. And that's what community is supposed to be. And community is probably actually one of, at first when I was learning, I thought community really didn't matter. Now it's actually probably one of the more important things, because again, as human beings, we have feelings, and as human beings, we get discouraged. And I can certainly say, as I look back on my trading journey, it's the successes of others that at times when I was feeling pretty down, that kept me going. And boy, am I ever glad. I'm so glad I didn't quit on myself. So what you looking at there, Chris? Yeah, good. So we're talking, oh, you're marking up the different rejection zones where it could pull back to. That makes a lot of sense.
Yeah, and this could change, right? Like this is just based on this move here.
Mm-hmm.
If I had another run of green candles, I could do another one,
Yeah.
because this is always changing, right? But yeah, you can see we came down and tested that 382. So you gotta think Fibonacci's from here to here is 100%. That is 50%. That's 618%. And these are those different rejection levels. So any big move, any scalable move like that is always going to have some type of retracement. Um, it could be huge. Like this could be 150 pips on NAS, or 200 and something pips, or not even that much. Like let's just say 50 pips. There's always going to be somewhat of a retracement. and this is how we kind of figure out how far it'll go. And if it retraces farther than 618, I'm not interested in buying it anymore. It totally invalidates the fib,
Yeah,
right?
exactly.
So there's some really really cool stuff with the fib, like there's fib circles, and like there's all kinds of fib stuff. Have you ever seen the swirl of the
No,
fib? Oh man,
no.
dude, that one is really really cool. The fib spiral. Watch this.
Oh my goodness.
Right, so you would draw it up to where you normally would. Right here, let's. So anybody that knows the Fibonacci sequence will kind of have an idea of what this is like, what it kind of looks like. This is what kind of represents, like flowers grow like this, your ear grows like this. But just look, it's it's so crazy. Like
Hmm.
it could, like, look at Steve. Steve will understand this. R4,
No way. Look at that.
right? Right?
It lines up with R4.
Yeah, yeah. And
Wow.
if you were to draw up boxes and double them, because Fibonacci is like 1 + 1 is 2, and 1 + 2 is 3. Like there's a sequence of these numbers. If you draw these boxes out, it actually it all fits within inside here perfectly.
Hmm.
So don't ask me how it works. It just works. But it's super super cool. I just moved my fib. That was, oh well, that's fine. But if anybody is still in that or interested in that, you could definitely take it. Let me see if I can get my fib back, and I'll just explain why you could go. So we've already retraced that. So this is now different. But I can layer these. We're called laddering. And we go to our first one here. I know it starts to get really like,
You're getting really advanced. Now, do people need to be
yeah.
this advanced to be
No,
profitable?
no, absolutely not. Absolutely not.
Yeah,
But
I hope we're not scaring anybody away. Like you
no,
can
no,
make pips just by taking the good arrows based on some really really basic criteria.
absolutely. Absolutely, of course. Like that is the basis of what you need to learn. And then you can start adding some of this stuff. It's not as complicated. Like if you can draw with crayons with your kids, you can do this, right? It's pretty simple. But
It's true.
right, like we drew up this one, right? And then we drew up this other one. See how there's this run here? And I drew it just up to the top of that red candle, the wick of it. Look at where it's come down to. 382 again,
Again, that's
right?
crazy. Why don't you delete the bigger fib just so we can see the smaller one? Because imagine there's some
Uh,
people their eyes are probably watering. There we go. Yeah.
right? So you could move this one up now to the 50% there.
Yeah.
And oh, I just moved it. That's okay. Right to there. And
So
this
cool.
one like that, right? And it's not just on those small ones, right? Like you can, like I could take it from here,
Yep.
right? I could look at it on the bigger overall move that happened, and look at, we could expect that price would come back to the 382, right? And then continue up, right? So super important. Like we're not saying that you have to learn this stuff to be able to be profitable and learn. But this is the kind of value, this is the kind of stuff that you get access to be able to learn to even further improve your trading, right? If
Yep.
if once you get those arrows and the hoppers and you get that divergence and rejection and you see all that stuff, you can start adding a lot of this other stuff to it. It's just an added help, right?
Yeah. No,
Uh,
absolutely.
More advanced for sure.
Now, Jay was just asking, is there a way to do that? Oh, he jumped off? I think he's jumped off the call. We're over time. We normally stop at
Oh
8
yeah.
o'clock.
Oh
Jay,
yeah.
but yeah, Jay was just asking. Um, and Rob saying, "Thanks, guys. Why didn't I meet you guys a few years ago?" Oh man, good to have you guys with us.
All good.
So fun, so fun. But the way that James teaches guys is that you're gonna learn this, and you're gonna learn just what you need in order to go out there and start making pips in the market.
Yeah.
And then he layers on like what Chris and I have shared with you tonight. We have learned over a matter of several months. So you don't have to learn it all at once. It's all laid out in baby steps. And the academy will literally get you guys started from the point where you literally don't even know what a pip is. You don't know what a candle is. You don't understand what that little bar is on the chart with the pointy thing out of the top and the bottom of it. And you don't really know what it means. And it's all, if you feel like you're drowning, that's what I felt like. And it's all there to get you going from that point. And it's actually a lot easier than one would think. It's a lot easier than learning a new language for sure. And like significantly easier, that's for sure. So anyway, um, yeah. So Sakti, I hope I'm pronouncing your name right. Good to have you with us. You were struggling so many before. Yeah. And, it's great to be part of the community, and we support each other because, guys, we're learning a skill that actually the world around us tells us we're not supposed to be able to do. It's a skill that can make you completely free from the working world if you wanted to. The thing that really excites me is actually seeing people out there working jobs, because not because they need the money, but because they're passionate about what they're doing. So, the person who owns the coffee shop, and they don't necessarily own the corner coffee shop because they're trying to make money off it, but they own it because they've always wanted to own a coffee shop. There's actually a coffee shop like that here in Kelowna that I've always been impressed by that. So that's what we're excited about creating here. We're excited about creating and being able to put people in a position where they're financially independent and financially, and that fear comes off, and that's where creativity really opens up for people. So anyway, we are now well after 8. I have 2 little boys upstairs that I need to go put to bed. Chris, any final thoughts before we jump off here?
No, I think we covered everything we needed to. Yeah, if anybody has any questions or anything, you can throw it into the different chats that we have in on Facebook Messenger. And if you were brought here tonight by somebody, a friend, if you're interested in wanting to know more, just reach out to the person that invited you, and they can help you get started or help you get your questions answered.
Well, thank you very much, Chris, for coming and doing this with me. This has been a lot of fun. You and I both, I know we're both so passionate about trading. It's just so fun. And being able to actually open up our, our private team call tonight and actually allow all of you guys to be able to come in and actually see what we're doing is just a tremendous honor. And we're really excited about it. So thank you guys very much for coming. And hopefully see some of you guys on our 6 a.m. call that we do for our team, 6 a.m. Monday to Friday. We go from 6 to 9 a.m. actually, not really because you need to be on the chart that long. We just do it for the purpose of the team. With this strategy, actually, by the way, you really don't need to trade longer than about an hour, maybe an hour and a half to get your pips in the morning. But again, like we said, we like to keep the call open for people. So we trade between 6 to 9 a.m. Pacific, Monday to Friday for the team. And again, if you want to join that team, reach out to the person who got you on this call, and they will help you do exactly that. So with that, I'm going to say, have a great night, everybody. And we'll either see you tomorrow on the call or we'll see you next Wednesday.
Have a
Blessings
great
all
night.
around. Thanks again, Chris. Good night.